Aloha YouTube. How are all you investors doing today? My name is David Yansen. Welcome to my channel. Today is October 6th. It is Tuesday, 2020. We are looking at my M1 Finance account and my M1 Finance portfolio. It's a Roth IRA that I have here with M1 Finance. I started it last year, 2019 in September, so it is almost 13 months old, just 3 more days. And as you can see by its performance, it has done relatively well for me. I am over $7,000 and earned dividends so far over $96 just for this account. That doesn't include any dividends that I have gotten via my miniature Webull account, which I basically just opened up Webull for the free stocks. So if you want the free stocks as well too, then check the links in the description, and you can open up if you don't already have those brokerages, you can open up Robinhood, Webull, Doe Finance, or Public, and I do have some other videos on those too. Check my playlist. I have playlists for pretty much all the accounts that I have, and I have different holdings in all of them as well too. So return over 19%. Yesterday's video, I was over 20%, which was nice, but the U.S. stock market was not good today. The futures for tomorrow are not looking good as of right now. The U.S. stock market was actually doing pretty well in early trading hours up until probably the last couple hours of the trading day. I stopped paying attention around 1 p.m. I guess would have been East Coast time, which would have been like 7 a.m. here. I started looking at it at around 5:30 in the morning Hawaii Standard Time, and I thought, okay, it's going to be a good day. You know, it's already halfway past the day, so it's probably going to be good. But with the volatility, presidential election this year, stimulus talks, and everything else that has been going on around the world and in the U.S., it's just been a very volatile U.S. stock market. August was amazing. September, in my previous videos, I kept saying was slumpy September. And October, not sure what it's going to be, but it's been kind of a mixed bag. But regardless, it's a good buying time. So if you have the money and you want to pick up a couple holdings or add to some positions, it's a great time to do it when the stock market dips. So looking at what happened today, and I am going to talk about a couple of my holdings here later on in this video in just a minute or so here, but I did want to show you what happened today. Everything basically in the red for today. I already initiated, well, I actually haven't done a buy yet. My buy video for what I am doing, because if you've seen my previous videos, you know every single week I have been contributing $100 to this portfolio, to my Roth IRA. I'm at $7,100, but in full disclosure, you can see $46.22 is for the 2020 contribution year, which is what you, in my opinion, you want to max out your Roth IRA every single year. And like the disclaimer says in the link in the description, not the link in the description, in the description, I'm not a financial advisor, an economist, or an accountant, so do your own research for yourself. So I believe that I will get this to the $6,000 for the 2020 contribution year, which is a nice milestone to reach, in my opinion. And then every year after that is to continue to hit that. So even if I have to not buy into my growth portfolio with Robinhood or my other portfolio with Fidelity, which is a dividend growth portfolio as well, then I won't. So, and I had to do that before previously. And if I don't have to buy food or something like that, then I won't do that either. So I want to hit that $6,000 at least for the first year. You know, it's a nice milestone. It's a good boost to the ego. It's a nice psychological win as well too, especially when you're a new investor like myself. I've only been doing this for about 15 months. And so hitting small milestones I believe is good for the psyche. And pretty much anything that you do. So, and I often set goals for myself. I haven't always achieved them, but I almost always set certain types of goals for myself. So wanted to quickly talk about SPHD here, this Invesco ETF, exchange traded fund, high dividend, low volatility. I have placed an order to sell out of this one. It hasn't recovered since the dip. My average price is $36. I believe I first started buying into this I think it was actually the first one that I bought when I opened this ETF. Yeah, I think I started with SPHD, and then I slowly started adding to this portfolio when I first opened up my Roth IRA. And I liked it because it was pretty cheap. It was like $44 is what it was trading at. It has not gotten back to that. I don't think it's gotten anywhere close to it. I think one time it was at 37, but that's the closest it has gotten. And it pays monthly. So I thought, okay, this is a nice, safe way to start out, because I was new, and I still consider myself new. So feel free to leave comments, suggestions, or opinions in the comment section for me. I do appreciate that as much as I appreciate you subscribing to the channel and also liking the video. And feel free to share with your family and friends. But I am selling out all of the 9 shares and a little bit of fractional shares there. It's a total of $312.57. This ETF hasn't recovered. There is another monthly paying ETF that I have that I like a little bit better. And I did read Michael Ramey's, I'm not sure how you say his name, on Seeking Alpha. And I had been thinking about this since April, because I sold out of DGROW, which was another dividend growth ETF that I had at one time. I also had VIG, the Vanguard Dividend Appreciation ETF too. I sold out of both of those, and I started, I was feeling more confident. I was feeling I could jump out of the ETF space. Being in my mid-40s, I wanted a better dividend yield with a much lower expense ratio, and I felt like I was growing. So I started selling out of those ETFs. Not that they're bad ETFs, and not that this is a totally bad ETF either, but I wanted to start investing into some other companies. So I started buying into Apple and some of the other ones that I have in my blue chips and my real estate investment trust. And then eventually I added this international ETF here, VYMI. So look up any of these holdings if you want to check into, research into them and see how they're doing. So the SPDR Dow Jones Industrial Average ETF gives you capital gains, and it's a monthly paying dividend. So once that $300 sells from SPHD, I'm going to put that money into this ETF. Right now it is trading at $277. So I will have just a little over 2 shares, unless it just drops significantly, like it dropped today, like $3 and some change. But if it drops like huge for tomorrow, or Thursday, I guess, is when the trade will actually go through. M1 Finance only has one trading day for you at the beginning of the trading day for the U.S. stock market, unless you want to pay for that second midday trading, which I don't want to do. So probably Thursday, those extra shares will be added to this, and then Thursday I will probably do my buy for the week. If Apple continues to go down and it drops down like to $105 or $100 or so, which I don't know that it would drop that drastically, but if it does, that will be what I will be contributing, my $100. And it'll actually be, well, this 183 is from Kimberly and Clark. That's the dividend that I was paid from them, this $1.83. That is probably going to go into this DIA, because that's how I reinvest my dividends. Every time they come through, I just put whatever I'm buying, I put it into that one first. So I don't necessarily do a drip approach to my dividend investment, to reinvesting my dividends. So, but then I did also want to mention, seeing how this is a dividend growth, and the majority of I can't even say the majority of my holdings, but of all my blue chips, my blue chip holdings, they are all 25 years plus of growing their dividend. Not so much for my technology slice or my real estate investment trust, but Microsoft is been in the news a lot. I only own 1 share of them. I guess the good thing about them not taking over TikTok, which I thought would be positive for them, because Microsoft, as far as being relevant, in my opinion, they do have the Surface tablet, but it's really only Xbox. So my personal opinion was, if they had picked up TikTok, that would give them a nice social media platform. Google has YouTube, which is around the world. Facebook, Instagram, Snap, all these companies have something that keep them relevant. Older people tell us where we've been, new people tell us where we're going, and cell phones and social media is what's going to be for the future, and Microsoft doesn't really have that. And even though they're a great company with an amazing balance sheet, I would still like to see them be a little bit more current. Now their cloud storage brings them pretty current, and I wouldn't be surprised if they do something big later on in the future, as far as maybe buying Uber or something like that, if Uber can't get things together. But what I wanted to mention is, because they didn't get that big for TikTok, that allowed them to increase their dividend by over 9%, almost 10% actually. So it was like 9.8% or something like that. So that's a nice little pay raise we all are going to get if you own Microsoft. And that is another reason why I like to invest in dividend growth companies, because every single year you get that miniature pay raise. If it does drop down, right now it's trading at 205. If it does drop down some more, I will probably just go ahead and add to this. It won't give me a full share. It'll probably give me a half a share, but it'll be nice for when that next dividend payout comes out, that I'll get a little bit more of a payment than just for the one share. So that's what I wanted to share with you guys today. Be safe and healthy, everybody. Subscribe to the channel. Mahalo and aloha.